I'm not surprised that we're still performing a pantomime, because that was always going to be the case. Rather than answer the question subjectively, I'll just say, look at the way the pound has moved against the euro. It's past its nadir. It is the canary in the cage. If the pound were to suddenly go down, you'd know that there was a break in negotiations that was sending us into some sort of hard Brexit. The pound's been rallying, which to me says that we've finally crossed the Rubicon and everyone's now looking for a solution that will be amenable to all sides. So in answer to your question, we're through the worst. Trump is a force of nature, but not in a good way. Rather than comparing to Reagan, probably the most apt reference point is Nixon. Trump doesn't know what the consequences of what he wants are. And the most important one is that if he wants to reshore manufacturing to the US, if he wants to stop illegal immigration as he sees it, he's effectively stoking an inflation cocktail. If he wants the Chinese to stop selling stuff, as he sees it unfairly, more inflation. But more importantly, what has kept US Treasury yields where they have been, i.e. ultra low, has been foreign buying of treasuries. And if you don't want to have a current account deficit, you lose your capital account surplus. It's called a Triffin paradox. So there's a lot of bad economic news ahead for the US. I think Trump doesn't quite get it. Well, in the US, you've got to be concerned about fixed income markets. You're seeing treasuries pushing out the yields. Equity is different. Equities in the US are very largely overseas earners, so their fortunes are served elsewhere. So it's really equities over fixed income in the US. And you include property equity as sadly a fixed income play. In the UK, it's funny because it's just follow the money. You've seen Comcast outbid Fox for Sky. You've seen eShore be sold. Corporate deals are not drying up. Into the shopping centre group have had an approach from a consortium, which includes the Canadians. So the idea that somehow capital is evacuating the UK isn't in agreement with the facts. It's a sort of journalistic misrepresentation of what's going on. In the UK, you're seeing sterling strength actually having an effect on equities because they're responding in the way they do, which is to price down. And also expectations about interest rates in the UK are changing. Maybe if the economy is stronger than it was once feared it would be, then there's room for more rate rises. I don't quite agree with that, but that might be part of sterling's recent strength. If Italy had a currency, it would have moved sharply lower. Because it doesn't, the sovereign bond is doing the work, and it's signalling that all is not well. These are problems, whether it's Italy or looming. Take Greece, for instance. We think that somehow Greece is through its worst. It's not. What's happening is you're patching over issues that then return. It just needs someone to scratch the itch, and the rash comes up. Europe is not healthy. If it were, you wouldn't be still seeing quantitative easing. Just bear that in mind that this bond push out is still in an environment of quantitative easing. The ECB is still buying fixed income. So the future of Europe isn't unclear because it's very clear that it's not particularly favourable. And it's that backdrop that really, 3 years ago, made me think that leaving the European Union was a good idea. And to this day, I've not changed that view. China is incredible. It's so misunderstood. It's not a debt fuel bubble. It's not an economy that is poised to drop off a cliff. It has years of impressive growth ahead. It only joined the global family in 2002, so it's not even 17 yet. The authorities in Beijing are reorienting the economy towards domestic consumption. They're reducing the reserve requirement. The currency is going down against the dollar, to the chagrin of Trump, but it's going up against currencies that are linked to resource economies. So really, it's been managed really, really well. and yet the journalistic narrative is that it's been managed badly. And here's the important point as I see it. No country in Europe has the symbiotic links with China than the UK. And no country, therefore, will benefit in the years ahead from China's domestic-driven growth than the UK. And not least our universities, which are soaking up China's 18-year-olds, of which there are many, many, many millions, and of which, of those many millions, more and more have the wealth to go overseas to study and pay rather generously for the privilege. We don't do macro. We do fundamental research, and we're fully invested. We have 12 different strategies, all rather diverse in their own way. But if you look at our performances, they reflect that fundamental data-driven, non-emotional approach.